Hello and welcome to The Upside. I'm Kyle Cheropita. We're now into May, and April had no shortage of headlines, with several major stories playing out globally. Tariffs and trade wars continue to be top of mind, as was an election for us Canadians. Today, we'll be reflecting on the month of April, featuring clips from our FidelityConnects and Upside webcasts. Connects is live daily for advisors, and then available on replay for all as a video podcast. And The Upside is our investor webcast, with both clips and full shows streaming on Zoom, LinkedIn, YouTube, and more. The election is where we'll start off first. Shortly, we'll get into my interview with Michelle Munro, Director, Tax and Retirement Research, who joins the show to help Canadians understand the election's potential tax impacts on your financial plans. But first, after Monday's election that saw Mark Carney elected Prime Minister, we welcomed an all-star panel onto Connects, featuring political strategist David Hurley, as well as Fidelity's David Wolf and Peter Bowen. Take a look.
I think if you want to understand the campaign, I think it's best understood around the decisions of four people that really led to this outcome. The first decision and the first person is Justin Trudeau, who resigned. Justin Trudeau doesn't resign. There's a more than 200-seat Poilievre majority sitting in the House of Commons right now. Second thing is Carney decides to enter politics and run. If the Liberals are led by any other leader in this circumstance, they lose and lose badly. Carney was a deus ex machina in the game. The third person and the third decision is Donald Trump. And Donald Trump decided to enter Canadian politics, not only impose tariffs on us, but trash talk us, threaten our territory, demean our existence. And that collapsed significantly the Bloc Québécois vote, which went to Liberals and Carney to be the people who will fight Trump. Quebecers reacted to Trump more viscerally than anybody else in the country, presumably because they're aware of what the French language rights laws are in Louisiana. And then the fourth person in the fourth decision is Poilievre. Poilievre and his campaign manager, Jenny Byrne, and she articulated it for a number of years on The Curse of Politics, was there are more conservatives out there than or Aaron O'Toole or Andrew Scheer getting to the ballot box. And if you run as a real conservative, if you stop this nonsense about moderation and moving to the center, if you run as a real conservative, there's a lot more conservative votes out there. And she proved that theory correct last night. They got way more votes than they've gotten for a long time. But what they also did at the same time is scare the bejesus out of most of the NDP vote, because they were presenting such a stark conservative option that the NDP literally collapsed in the face of it. And I would say 3/4 of that NDP vote went to the Liberals, and about 1/4 in some key ridings went to the Conservatives. Okay. So that, in a nutshell, is what got us, I think, to where we are today.
I think over time, markets are going to tend to like this outcome. And the reason I say that is I think there's been sort of an undertow in Canadian assets, whether it be Canadian dollar, TSX, even to some degree sort of pricing in bonds, that had to do with the markets not being thrilled about the economic and fiscal management at the federal level under the Trudeau government. Mark is very different. That's his area of expertise.
And you call him Mark because you know him well, because you worked with him at the Bank of Canada.
Yeah, so I served as his advisor when he was governor of the Bank of Canada, obviously, many years ago now. And I can testify to the fact that he's really smart and really disciplined and really hardworking and, cares a lot about policy. And, he's going to be in the weeds on fiscal, on economic, on tax policy, et cetera. So, but I think there's also... the Prime Minister is the Prime Minister and he has this expertise, but I think it's being underestimated. There are some other really good experienced people coming into government as well. So, for example, a couple of other folks that I used to work with, it's a small world here in Canada. So Carlos Letao, who I believe won election in Quebec, used to be Finance Minister of Quebec, was longtime Chief Economist at Laurentian Bank, and then Tim Hodgson, who used to run Goldman Sachs in Canada and was with us at the bank for some time as well. These are really experienced hands, and I think unlike what we've had in the Liberal government for 10 years, so Mark is going to have some help. So I think ultimately, yes, we can talk about the specific policies that may or may not come to pass, but just having that expertise in government, I think ultimately is going to, be favorable as far as the market's view on what's happening in Canada.
Next up, for more on the election's impact on your wallet, here is Michelle Munro. Michelle, thanks so much for joining me today.
It's great to be here. Thanks for having me, Kyle.
So we're here today to talk about the election and the election's results impact on Canadians and their financial plans, potential tax implications. Just for context for reviewers, it is the afternoon after the election, Tuesday, April 29th. Why don't you talk to us a little bit about what happened yesterday and what might be coming next from the government?
Okay, so let's focus a little bit on the tax aspect of the election. So, as we know, Liberals, at this point, it's a minority government. There's some people they're recounting ballots, but
we'll see.
We'll continue with that. So from a tax perspective, the Liberal platform is that they've proposed to reduce the lowest tax bracket by 1% from 15% to 14%.
Okay.
So that will impact Canadians. It won't take effect until July 1st. So when it's fully phased in, it's about $400, $500 per person, which we're paying taxes. But Kyle, I'm a tax accountant.
Yeah.
Watch the pennies or nickels and dimes as the case may be, and let the dollars take care of themselves.
Right. Okay. Now, a lot of seniors across the country we got to think about as well. Anything going on with the RIFs and that they need to think about?
So thinking about RIFs, there's a RIF minimum withdrawal each year. And what the proposal is to reduce that minimum withdrawal one time by 25%.
Okay.
So what that does is it allows seniors the flexibility, potentially keep more invested if they don't need that minimum RIF withdrawal. And more invested means compounding returns and a larger nest egg. So as investors, that's a positive thing.
It is. I also wanted to ask you about capital gains. I feel like over the last year or so, just keep hearing about capital gains. Capital gains kind of going hand in hand with all the swirls with the government. What's going on there?
So we have to roll back to the 2024 federal budget, so just over a year ago.
Yeah.
And they announced that in general there was going to be a capital gains increase from 1/2 to 2/3 inclusion rate. There was a carve out, but that was general. So it was it didn't get passed, and then the government was prorogued, and then we had this election. And I like the certainty that now the Liberal platform is very clear that they're going to cancel it. Okay. And so from a tax perspective, we like that certainty as well. That's the key point there.
Yeah.
And so we'll have that 1/2 inclusion rate. So no changes.
Okay. Speaking of certainty, you can also get that through something like a budget.
Yes.
Now that we have the election that took place, budgets usually follow, I believe. What's next there?
So I think it was more in some of the statements that came out. We should expect that there'll be a federal budget before the end of June. So before the beginning of July. Okay. And so with that, we'll have the actual finalization of some of these proposals that will come through.
Okay. Right. We'll have to have you or one of your colleagues back to walk us through that when it happens.
So the last number of years, I've been able to go to the federal budget lockup.
That's right.
And what that is you're in a ballroom and it's secured. So you have to give up your cell phone and any external devices. There's actually armed guards there making sure everybody complies. Not that would ever be an issue. And with that, you get an advanced reading of the federal budget, and people with 100 of my closest tax colleagues are looking through that and finding out, well, what does that mean? And we're really looking at it through what does it mean for Canadian investors?
Yeah, that's really cool. Yeah. And is that in Ottawa then?
That's usually, it's in Ottawa.
Yeah,
right.
Very cool.
Yeah, and when we get to speak with Department of Finance individuals.
Yeah.
So that's really interesting. Yeah. Because you get in and you're looking at the actual words in the budget, the proposed legislation, and well, what do you mean by this, and what do you mean? And really understand some of the mindset behind the changes and what is the Department of Finance thinking. Oh. So from a tax perspective, it's a really interesting event to go to.
Yeah, that's very cool.
Yeah.
Now, when you're with me here today, I also wanted to ask you about TFSAs, RSPs, very important products. Any updates with TFSAs this year?
So tax-free savings accounts, they were introduced in 2009. Anyone over the age of 18 is able to contribute. In 2025, the maximum TFSA contribution limit is $7,000.
Okay.
Now,
is that up a bit from before?
Well, when they first introduced in 2009, it was $5,000.
Right.
It's gradually increased. At one point, they got up to $10,000, and then it came back down and gradually increasing again. Which, you know what, Kyle, this brings up a good. So if somebody was 18 in 2009, the cumulative TFSA contribution room would be $102,000.
Oh, wow.
Pretty significant. And a couple different things here. So thinking about somebody who's like more of a senior who hasn't been able to contribute to that, and maybe they've sold a property, a cottage, maybe their principal residence, and sitting on some cash, taking advantage of that $102,000 to invest in, and I'm saying invest actually, because the name is tax-free savings account. So often people think like, oh, it's a savings account, a high interest savings account or something. No, we need to think like investors.
Yes, we do.
As that it's a tax-free investment account.
Okay.
So think of using it for investments in mutual funds, exchange-traded funds, ETFs, stocks, bonds, what have you.
Right.
So there's a lot of opportunities with that as well.
There is, and a lot of products available from say, Fidelity.
Absolutely.
Where someone could invest, RSPs, I also wanted to ask you about. So those I know are very unique to the individual, but anything that you can say about those right now? So
registered retirement savings plans, they've been around for 50 plus years, related to earned income. So the maximum annual contribution limit for 2025 is $32,490. But as you said, it's individual. So best to check your notice of reassessment, maybe go to My Account on CRA's website to find out what is the actual balance that you could contribute in 2025.
Okay, good to know. Good to know. Now, we're lucky to have you in the studio here with me today because frequently you're traveling all across our great country. You've been coast to coast lately. What are you hearing from people out there? You're talking with advisors, investors.
Literally coast to coast.
Literally, yeah.
In March, 1 week, I was in Halifax 1 week, and the next week I was in Vancouver.
Wow.
And I go everywhere in between. So speaking with investment advisors, financial planners, and their investors as well, talking on a variety of tax-related things, but bringing it back to sort of the fundamentals.
Yes.
It's the newsreel. Like we're talking about the Canadian federal election, but I think the global newsreel, every day there's something new. So what it leads to people's feeling uncertain.
Right.
And it's human nature when one feels uncertain to sort of default to negative, like the worst, a bit of doomsdayer-ish, if you will. And people who work with a financial advisor, I think like it should actually be financial coach because it's instructive, but it's also that emotional aspect.
Right.
And so bringing it back to a bit of those fundamentals is like, well, what is your financial goals?
Right.
Retirement is typically the biggest one for individuals. It's a long-term goal.
Right.
And with that, thinking about, well, what is your time horizon? Even somebody who's in retirement, like retirement could last years, decades,
For sure.
a long time horizon. And then thinking about, well, what is that asset allocation? What is appropriate for that individual and their risk tolerance?
Right.
And all those pieces together is really where a financial advisor really helps
that
clients.
value of advice.
That value of advice. And we talk about that in having a written financial plan.
Yes.
We do an annual retirement survey, and we ask those who
right.
have a written financial plan and those who don't, like, how you feel prepared financially for your retirements and financial goals.
Right. Any key trends or anything that you're seeing right now?
It's no surprise. Those who have a written financial plan feel better prepared financially.
Right.
But what comes and consistently year after year is not even feeling better prepared financially, but it's also emotionally, socially, even physically from having that written financial plan.
Makes sense.
And anything written, you write pen to paper, it gives you that discipline to achieve one's goals.
Right.
And with anything, working with an expert
Yeah.
to help you achieve those goals, create
sure.
that written plan. The value of financial advice.
Exactly. So this year's report, I believe, is due to come out soon.
It will come out in the middle of June.
Okay.
So June's going to be a busy month.
It will be here before we know it.
We will have that annual retirement report.
Yep.
We'll probably be in a federal budget. So
Yep.
you'll have to have me back and we'll do a deeper dive
We
into
will.
both.
Hopefully a Stanley Cup for Canadian team in there too.
Let's hope.
Knock on wood. Yeah. No, we'll definitely have you back. Pleasure having you here with me today. Thanks
Great
so
to
much,
be here.
Michelle.
Thanks, Kyle.
So continuing on the Canadian theme, next we'll hear from Portfolio Manager and Director of Research, Ritu Kumra. Ritu pulls back the curtain to see what has led to the TSX outperforming the S&P 500 and the Dow so far this year. She'll also touch on, as Director of Research, how the Fidelity Canada portfolio managers and analysts have used shared research to try and stay a step ahead of this year's volatility, which contributes to Ritu finding both long and short opportunities right now for Fidelity Canadian Long Short Alternative Fund.
I'm sure you've heard many members of our team talk about the fact that the market can handle good news, the market can handle bad news, but the market does not like uncertainty. And those are the times that we're in. So at this point, it feels like we are late in the cycle. We could
Does it? I mean, if you should sort of pick a cyclical story, like does it feel like we're in late cyclical?
Yeah, I would say so, in my opinion. And whether this turns into an economic downturn or even a recession will be very much dependent on how the tariff situation evolves, as well as the duration. The market at the moment is a scenario that's being baked in by the market is stagflation, and so that could be something that we end up seeing. So I think what's important to keep in mind in this context, though, is that we've had a tremendous amount of volatility, and with volatility, we have opportunity. We have the opportunity right now to buy incredible businesses for cheaper valuations than we've seen in the past few years. And so our team is taking advantage of that, and the research team is doing an absolutely incredible job just trying to make sure the funds across the platform are positioned the way they should be positioned and understanding what our risk reward is right now.
So let's talk more about research, but specifically how it kind of fuels the fund that you manage ultimately, because it does come down to that, doesn't it?
Absolutely. So I can't talk enough about my research team. The research team here in Canada, there are typically about 9 individuals on this team. They are phenomenal at what they do. They've gone through our grueling interview process where they've met every single team on every single member of the investment team through a set of interviews, as well as doing a stock pitch at the end for the entire team. And they just have this fire to generate alpha for our fund holders. Like case in point is what has transpired over the last few months. So these tariffs were first announced at 7 p.m. on November 25th. Every single investment team member or research team member had a complete analysis in terms of exposures to each and every one of their companies, understanding what the valuation looks like, understanding where we should step in, what the risk reward looks like, understanding the drivers before market open the next day, which is absolutely incredible. And it's really talks about the power of our research team. So as a result, this team is in the trenches. They know exactly where the assets are, where the sales are, where the exposures are, who the competitors are. And so they're focused on the stock drivers, valuation, dissecting balance sheets, and really just they've done an incredible amount of scenario analysis so that when we had the beginning of February happen, where there was a potential for tariffs, and then again, the beginning of March, and then eventually Liberation Day, as news flow has evolved, they have been doing such a great job in equipping the entire team and our products in terms of where we should be positioned.
It must be such a live document, each for each company, because it's constantly being changed and added to when you hear more about autos or less about autos and so on.
Absolutely.
Tell us a little bit about how you have put that research to work within this fund. It's a long-short fund. Tell us, and it focuses on Canada, which I think to a lot of people, we've all thought we need to be invested in Canada, but maybe somewhere else, maybe the US as well. Give us sort of the pitch for Canada right now.
Sure, absolutely. So it's interesting because the narrative around Canada has not been positive. And so if we think about what we have heard in the past, okay, so we have a lot of leverage within the consumer base. So if you think about what happened during the GFC, the U.S. consumer delevered, but the Canadians just kept going up in terms of leverage.
Buying more expensive houses.
Exactly,
Yes.
exactly. And then marry that with the fact that we have higher interest rates than what we've seen in the past, and we have a wall of mortgage maturities coming up this year and next. And so that doesn't sound very good. And then you tack on the tariffs that have emerged, as well as election risk, and the top-down narrative does not sound good, and not to mention productivity as well, the lack of productivity relative to our friends south of the border. So while that all is very true, I think what's important is to understand Canada from a bottom-up standpoint, as well as to understand the TSX from a bottom-up standpoint. So when you look at the mix of the TSX, we have roughly 40% that are interest rate sensitives, which typically, in general terms, do well within when we have a monetary easing cycle. You have about 30% that are resources. Within that 30%, that there's a 10% slice that's gold, and we all know that gold has been doing quite well. The rest of it being industrial commodities as well as energy, and then you have the rest, the remaining 30% that is very much consumer and industrial businesses. Where if I had to put them in broad categories, you have your cyclicals like your transports and autos. You have your quality compounders like grocers and C-stores, and then you have your defensive category, which is like, you know, waste names as well. So I used to cover, for example, the C-stores when I was an analyst, and that was back in 2012. Couche-Tard at that point was a $5 billion market cap.
It's massive.
Now it was primarily Canada, a little bit of US. Now it is a $70 billion market cap, and it's global, and it's
all
going
over Europe, maybe Japan.
Maybe Japan, exactly, maybe Japan. And so those are the types of businesses that we have that are more global in nature. Of course, in today's market, we're very much focused on the impact given the geopolitics around the world, but we have really good businesses in that third category. So it's not surprising when I kind of lay it out in that sense that the TSX is outperforming the S&P 500. And that's exactly what this fund is trying to capitalize on. The opportunities, regardless of what the top-down narrative is, the opportunities both on the long and the short side.
Staying with Canada, we also heard from Fidelity True North Fund portfolio manager Max Lemieux, joining Connects early in the month during that bout of market volatility. Max shares how he aims to win through being defensive. Take a look.
How are you going in to invest in companies, presumably with a bit of a defensive concern about everything, but also looking for opportunities of these changes?
We have to be selective. We have to be tactical. Again, uncharted territories. But if we know that the impact means probably pressure on earnings, we have to look at companies like if it was a potential recession. And then for sure, we have to be on the defensive. We have to be, the cash level has gone up a little bit. You want to keep some dry powder just to be opportunistic. When we start to have days where market is down 4%, sometimes there's dislocation because we've seen over the past few weeks, hedge funds margin calls, the leverage in the system is coming down. In the financial system, I mean from the financial actors. Yeah. We see also dislocation on long-term interest rates that go up as opposed to going down. Right. So it's a lot of things, indicators to watch for. But I think to play defense, gold, as you know, as of December, it was a decent exposure for True North. I believe it was maybe 8 or 9%. But you look at gold versus the cryptos. We've talked about this in the past, and I always had a preference for gold. And again, it's a very subjective instrument, but for once in the recent history, I would say it's acting definitely more as expected, given the turmoil that we see in the world and a lot of foreign countries being a bit worried about the US and how they're going to be treated. We see this trend on gold that at least maybe it's just going to be a plateau, but it seems to be a defensive place. There's also the utilities, which are defensive. And no matter what happens, that there are also like pipeline companies, like there are different pockets also. And would say most of the market is not necessarily impacted by the tariffs themselves, but it's a second derivative. What if there's a slowdown? What if earnings come down? Then you have to look at companies also in the consumer staples, like you and I might definitely reduce or stop going to the restaurants, but we'll keep going at grocery. And that will continue to be, a source of earnings growth, especially if there's a bit more inflation. Typically, it's also good for grocers, but it's really stock by stock. There are companies that continue to be on the lookout for acquisitions. We have no idea if that's this Japanese situation between Couche-Tard and 7-Eleven will work out. And that's what we do all day long. We keep speaking to the companies, we attend the conferences, and as you know, the incremental data point that we get from companies will help us to navigate this. And that's why, exactly like COVID, we have to make sure that we're on it and we don't miss a beat.
On FidelityConnects, in addition to featuring Fidelity's portfolio managers and subject matter experts, we'll often feature political guests, regulatory experts, and business leaders. This month, as part of our CEO series, we welcomed Steve Huffman, co-founder and CEO of Reddit. For those who may not be familiar with the platform, Reddit is a massive online network of communities where people dive deep into topics they are passionate about, from investing and personal finance to technology, science, and pretty much everything in between. Here, Steve spoke with host Agnes Doherty about Reddit's growth and how it continues to reshape the future of online engagement.
It's been a lifetime for us on the internet. Reddit actually, in 2005 when we started it, this was basically before social media existed. And so what we were doing is we were trying to build a place simply where you could find new and interesting links online. And it was literally just links. And so users would submit links, they would vote on them up or down, and then eventually you could have conversations about those links. But in the very early days, Reddit was just one community, one big pile of links. We used to describe it as like the Billboard top 40, but for internet links. So good stuff would stay at the top for longer, and less good stuff would kind of rise and fall more quickly. But that was the very beginning. But since then, Reddit has evolved into a massive community of communities that covers basically kind of every topic, experience, kind of in the human experience imaginable. Reddit is a place where you can find other people going through the same thing or people who have gone through the same thing. And so I actually think the best analogy for Reddit is to think of Reddit as a city. And so just like real world cities are technically like physical things built out of, steel and cement, cities are really living organisms. And, what can you do in a city? You can live and work and play and go shopping and eat, right? You can basically experience all of humanity in a city. In fact, I think cities are inseparable from humanity. Reddit is like a digital city. You can go there to share a few laughs, you can go there to learn, you can go there to research, you can go there just to be connected with your fellow human beings, you can go to give or receive advice, you can make product purchasing decisions. And so Reddit really is this, just like real world cities are actually kind of like living organic things, Reddit itself is a kind of digital version of that. It's a living organic space on the internet where you can connect with people about anything and everything.
I read this interesting stat recently. So in the US, Reddit was the 6th most searched word on Google last year. So people are actually going to Google to search for Reddit. And I find that so fascinating. And I'm just wondering, what's your opinion on why you've seen such an explosion of user growth in more recent years?
Yeah, so people on the internet want what Reddit has, which is authentic information and viewpoints, perspectives, advice about everything. And it's actually funny. So in the last 90 days, Reddit's still the 6th most searched term, literally the word Reddit on Google. So internet users are going to Google and then typing in the word Reddit because they know that's the best way to get an authentic answer. Today, or in the last few months, the word Reddit is positioned between the words news and the word Trump, which I think actually probably puts us in the kind of right spot on the internet culture map, which is right in the middle between, those two things. But at the end of the day, people want what Reddit has, which is an authentic place to connect with other people. One of the things I think we're really proud of at Reddit, or the way we look at our work, is that we're fulfilling the promise of the internet, connecting people regardless of geography or language around common interests.
I hope you enjoyed all of those segments. As mentioned, for more, you can find each clip as a full video podcast available on YouTube, Spotify, Apple Podcasts, and more. We had a lot of great content this month we couldn't get to in today's show. Dan Kelly, who manages Fidelity Founders Class, and Etienne Bouchard, Director of ETFs and Alternative Strategy, for example. So please look up the FidelityConnects podcast. I'm sure there is something for everyone. And as always, for more from us, please keep an eye on Fidelity Canada's LinkedIn, YouTube, or Instagram. Thanks for watching today, and I hope you'll join us again on the upside. I'm Kyle Cheropita.
Cool.